Hi, I'm Dennis Parody with Remax Hallmark, and I'd like to present the 5-Minute Property Analyzer, a tool that I created for my real estate investor clients, and I hope it will be of some value to you. In this short video, I'll go through the various simple process of analyzing a given property, how quickly you can do it, the ratios you can create, and how you can play with it to come up with your sensitivity analysis depending on your optimistic or pessimistic view of the future. Very important to look at that aspect of any financial analysis. How sensitive is it to assumptions that you make about the future? So, this particular tab is the 5-minute summary, key first page, if you will, of your spreadsheet. The second and third tabs are very important as well. I'll go through them, and the ratio is a reference to the various definitions of the ratios that are used in this presentation. So we'll see, starting off on the top left, where we can identify the property. In this case, the property address and city, and whether it's what type of property it is, a fiveplex, what have you. So this information obviously can be changed by you, and all the areas in white are you can modify them. The areas in blue are where you do your manual entries. The gray, stay away from those, please. These are your automatic calculations, which have formulas in them, and why you will always work from your copy of your master, never the master. So if you do inadvertently change something, the formulas in particular, you can always go back to the master, make another file copy of the property, rename it, and start plugging the numbers in again. And not have to worry about recreating the formulas. If you know Microsoft Excel, which is what this is obviously based on, you can customize this completely. And again, you'll follow the same procedure, of course, whether you customize it or not, of always working with a copy of your master. Enough said. So on this side, we want to create, start things off, information about the cash invested, the initial cash invested, which is an important aspect of looking at the property attractiveness from an investment point of view. So we can put in the market price, the purchase price, the down payment. The system calculates the balance. You manually enter the mortgage fees, if any. This is just reference information about CMHC mortgage premium insurance, if it applies. If you're a high ratio mortgage, it will. And you plug that in here. And you furthermore can put in closing costs, repairs, if any, on acquisition. And you can plug in another amount here and name it. You can change it. And you can also put in what we call a staying power fund. It's a contingency fund. It's not really invested. It's not hard cash outlay, but it is cash put aside, and therefore in investment practice we recommend calling it investment of cash initially. And you can see it totals up to about $125,000 in this particular case. Now, built into this was the mortgage calculations, so that we can over here generate the monthly payment. The system does that. If you tell it we calculated the balance from here, and here you put in the amortization period, the interest rate, and it generates the monthly payment and extends that out to the annual amount. Not here, not elsewhere. This is now the important component of wealth creation within a rental property, called the mortgage paydown. The system generates that out 5 years, and this is basically where your principal is being paid down on a yearly basis by the rent coming in. So the tenants are paying down your mortgage, and that's real wealth creation. There's 3 forms of wealth creation in property rentals. One is the from the cash flow, which we'll see in a moment. One is the mortgage paydown, and the third is the equity improvement or the value appreciation of the property. Those are the 3 forms of wealth. All of these are incorporated in this analysis at various places. So that's moving on. We have got the initial investment amount. we now move into expenses, and you can see where you can input those on a monthly basis. You can make changes to this easily for your customization, simple customization within the structure that I've created, and add your amounts as you will. And very simple and straightforward. So the system extends it out 12 months, and there is your basic operating income on a monthly and yearly basis. Very straightforward. Now the other part to generate net operating income is to know what your gross rental or your scheduled rental income is going to be, and we do that on this tab, where you can see you can easily create more. Again, just expand this matrix out to any number of units, copying the formulas down. And this one we have decided is a fiveplex, so we identify the beds, the baths, the square footage, and the system generates the rent and does an extra little bit here if you're interested in analyzing your monthly rent per square foot and your yearly rent per square foot. But this figure, you can see, is used, as this indicates, back in the 5-minute analyzer. That's where it's going to be used. And again, the blue is where you manually entry, the gray is left alone and used by the system to show you results. So again, we go back to the 5-minute, remembering 4801, we go back here and we see that's where this number was derived from. Now, every rent has its problems, and you should allow for a certain vacancy rate and bad debt allowance. That you could expand this to have them separately created, but this is a combination of the two in this case, and we get that data from the assumptions section here, very important area. You can see I've put in 4%. If I was to assume a worst case, let's say 6% or 5%, you'd see how this number changes. And of course, we don't want that to be 6%. It normally would not be that high, so we'll go back to say 3% or whatever. So that's how quickly you can make changes to your spreadsheet and to the analysis. And so now we've got income, expense, so we can generate the net operating income, NOI. A very important piece of information to know about your property. And you can see the cash flow is also calculated here, which takes into account mortgage payments and so on, principal paid, and you are looking at a number of pieces of information here I won't go into at this point in time, but it's something we can cover later. Over here we see where we can, I want to show you the pro forma statement, which takes the information we've inputted here basically and extends it out 5 years. That's simply what this sheet does. All the entries here are automatic. It's generated automatically. You don't put anything in here, but it is great information showing you how your net proceeds changes over a year, how your cash flow changes over the years, and so on, how your annual appreciation of your property goes up based on the assumptions, and so on. A lot of good information on a 5-year flow basis, so it's good stuff. So back to 5-minute property analyzer, I want to just show you finally some of the ways these important ratios, internal rate of return, particularly a good one, and the cap rate change depending on your assumptions. I've shown you how the vacancy is used, which has a small impact on the overall picture. But certainly annual appreciation is important. Now, this has to do with what your estimate of the property value, your particular, this property in particular, based on its location, etc. How quickly you think this is going to go up in value, market value, which is one of the forms of wealth creation for investing in real estate. And I've got 7%, which is pretty good estimate. Certainly could be higher in the Toronto area. But let's see what happens if we were to be less optimistic and we were to put 3% in. Watch how your numbers go down, of course, in the internal rate of return. You would actually see a negative rate of return in the first year, but it would climb to a decent level eventually, despite that pessimistic forecast for annual appreciation. Your operating costs, 6%, that's a bit high, probably more like 3% in today's rate of inflation. And rent increase maybe could be 3 as well. So we go 3 across the board, and we can see any changes you make here are automatically affects all the calculations on your key ratios and in your pro forma. So that's how easy it is to do your sensitivity analysis. You can take pessimistic assumptions, or you can take optimistic assumptions on the positive side, or you can take what is expected or in the middle of the road as well. Now, what you want to do if you do take those 3 snapshots, and my suggestion is that you go through, do a pessimistic one and a expected one and an optimistic one, and when you've got those views, take a snapshot of it, save the file and give it a name, property X, pessimistic, whatever, a date, something that can easily identify this particular view, and you can print it out and or save it electronically. So you'll have a permanent snapshot of what your views were of that property at that point in time. And you can do that periodically, because this picture may change, and on an annual basis. You may want to review this every 6 months, and you'll have a permanent copy of how you saw the investment changing over time. So that's basically the presentation of the power of this spreadsheet. It's based on Microsoft Excel, but it can also work on Google Sheets, free software, and OpenOffice, another free software spreadsheet product. It's available from my website to download electronically. You get a copy of the master, and you get a copy of an example, just like the one you're looking at here, for you to play with. And you can go to this website, DennisParity.com, and see on the first page, the landing page, and the home page, you'll be able to see where you can click forward to the order page and order this product if you would like to do so. I hope you consider doing that, and also if you're going to be looking for acquisitions in the Toronto GTA area, I'm an experienced full-time realtor with RE/MAX, and I've worked with a number of investors in real estate who appreciated my service. And if you'd like to give me a call or contact me through my website, more than happy to chat with you about that potential service for you. And in the meantime, I wish you all the success with your real estate investments going forward. Bye for now.